Do you want to know the difference between a intermediating financial planner and a non-intermediating financial planner? A lot of people ask me, what's the difference? So I want to explain it. I call the non-intermediating financial planner a holistic wealth planner. And hopefully as we go through this, you'll see why. So first of all, let me just contrast and compare a regulated financial advisor. This is a financial advisor who's also an intermediary, financial intermediary, and they are arranging investments, advising the clients on investments, recommending investments, pensions, general investment accounts, trusts, whatever is in their remit for their permissions. So this is a regulatory perimeter. And that's a financial advisor. The financial planner is a cash flow planner. They do cash flow forecasting for the client. Now, sometimes the financial advisor can also do the cash flow forecasting for the client. But the financial planning just done on its own is generic advice, is outside of the regulatory perimeter, providing it doesn't lead to a recommendation or introduction to a particular investment. So it can be a separate role. Some people think they can set up a business as a financial planner and just do the cash flow planning piece. The job is bigger than that. So let me just explain what I mean by that. And if you just try to do the cash flow planning on its own and the client arranges their own investments, they'll say, well, that's great, but I can get that sort of service free from my financial advisor. So why would I pay your fees in order for you to just do that piece? So I want to explain the broader part of the role of a financial planner who's only a financial planner, in other words, a non-intermediating financial planner. So they give education to the customer, they educate the customer on their regulated investments, and they also empower a customer to set up and maintain their own regulated investments. If a customer of a financial planner isn't confident doing that themselves, then the financial planner can refer the opportunity to a regulated financial advisor to do it for the client. So the client can delegate to a regulated advisor if they wish to do so. But I want to show you the broader role of the financial planner. So it's not just about the regulated investments. We can also look at the savings portfolio of the client. And we can use services like Deposit Sense in order to help the client maintain and run not just their regulated investment portfolio, but also their savings portfolio. And according to ONS, the Office for National Statistics, the savings books are about twice as large as the regulated investment books. So it's about a third of people's total savings and investment portfolio is regulated investments. So by being a financial planner, you can advise on all of their savings and investments. But that's just part of the total wealth. So the Office for National Statistics, the ONS study, the Wealth and Assets study, identifies the total wealth and assets of the average Brit. And actually, when you include property, which is about 40% of wealth, and occupational pension, which is about 40% of wealth again, that the total wealth portfolio, tangible assets of the client, regulated investments is just a small part of it. In fact, it's less than 5%. And that's without even taking business assets into consideration. So you see, you really, if you are doing financial planning and all you're focusing on is regulated investments, you're really only doing 5% of the job. So there's another 95% that you can add. So that's why it's important that we're skilled in understanding how to advise on, do generic advice on property, company pensions, business assets, savings, as well as regulated investments. So that's kind of the total picture, if you like. So if you're doing cash flow planning, you want to obviously include the property portfolio in there, You might be planning for buy-to-let landlords. You might be planning for occupational pension scheme members. You might be planning for business owners. You might be planning for people who run their own portfolios. You might be planning for people who have offshore assets. So there's all sorts of assets, because this is just British assets that we're looking at here. Okay, but the job is broader than that. The job is broader than just looking at that, because financial capital, which is the capital I've been talking about until now, is not the entirety of someone's total wealth. So the total wealth is actually two elements: human capital plus financial capital, and obviously less any liabilities that the client has. So that's total wealth. So what I mean by human capital is intangible assets that the client owns that they can convert into future income. So it's a lot clearer when you talk about businesses, because a business has intangible assets as well as tangible assets. So, for example, Coca-Cola, 95% of the value of Coca-Cola is its brand. In this visual, it's the character of you. So it could be, 10 times more your total wealth. Your human capital could be 10 times more than your financial capital quite easily. And we can see a comparison in the business world. They call it market to book ratio, where the market value, which is the share price times the number of shares, has a ratio to the book value, which is the financial capital that sits on the balance sheet. And tech companies can have a market to book ratio of 20, which means that financial capital for those businesses, the tech companies, the Googles of the world, they can just have tangible assets of 5%, and the intangible value is 20 times that. So you can see that the element we call financial capital could be a small part of the total wealth of your client. Their ability to use their skills, know-how, connections, health, character, and location to generate earnings could be far more important, could be the greatest asset for the client. And then we see savings within and investments within that is a small proportion, and regulated investments is a small proportion, still probably down to about 1% of total wealth at this stage. But that's not all of it. So there's another step. Holistic well-being is not just looking at the client's money. So it's not just looking at the financial well-being. Money is a means to an end, and the end is the well-being of the client. So we have to be skilled in life planning for a client. Now, identifying what would be holistic well-being. Well-being tends to be the goal for the client, and we need to understand the physical goals, the mental goals, the emotional goals, spiritual goals for the client, as well as the financial goals, because each of those goals has a liability that goes with it. And when we're doing cash flow planning, we need to know the lifetime liability profile for the client, and then we need to match the assets to those liabilities, and that's the process of cash flow planning, matching the lifetime assets and strategies related to that with human capital and financial capital to the lifetime liabilities. So now we see that it's actually even bigger than just looking at total wealth. It's looking at total wealth and well-being. At this stage, I'm calling the financial planner a holistic wealth planner, but I'm not done yet. This is one last stage. So what are the other skills that we work with the Academy members is teaching them about how to be a personal growth coach with the client, because you can take a snapshot of where the client is now in their personal growth journey, and it could be any of the 7 stages of the Abraham Maslow hierarchy of needs that they find themselves at. We ask them what their favorite future would be, which is typically the next step in the hierarchy of needs. So initially, if they're struggling financially and struggling in the world, it might be survival, but then it might be conforming, which is about forming relationships with people, and differentiating, that's about self-esteem and knowledge and know-how. Individuating is discovering who they are and why they're here. The self-actualization is starting to live into that and become on their path of purpose. Integrating is where people meet and people who are like-minded and find their tribe. And serving is where you collaborate with your tribe to make the world a better place for you having lived. And these are the personal growth journeys of our clients. So basically, that is the entirety of a holistic wealth planner. So if you'd like to know more about becoming a holistic wealth planner, please do reach out, contact us at the Academy of Life Planning. The website is aolp.info, or you can email me at steve.conley@aolp.com.